there have been a lot of discussions on the role of capital markets being the engine for financial priority sectors like housings and infrastructures. Maybe looking at the vast potential of African domestic capital, how can we best unlock these resources for long-term development? Because you've mentioned development ambitions in Ethiopia being one of the best things you've seen here. And specifically, what positive markets or policy enablers, because not just because you have a capital market, you can't really develop this very important areas of development like infrastructure and housing. So what positive market or policy enablers have you seen work elsewhere in other jurisdictions in Africa? Because you have also worked, and IFC also is present in most jurisdictions in Africa and other places. Encourage domestic capital to support productive sectors. And as Ethiopia is trying to build its market, how can we, as Ethiopian capital market and the entire ecosystem, position ourselves to successfully mobilize domestic capital right from the start? Because even if we're starting late, we want to shorten the learning curve to basically reach to where other markets are. Maybe if you want to reflect on this. Thank you.
Thank you very much. Like I said, I think Ethiopia is starting maybe later, but it was a choice, just to be clear, because I know when I was here that it was a decision, a deliberate decision to build first a commodities exchange, which would really to drive real economy, because that's where production happened. And there was a deliberate decision to postpone the launch of the capital market and the stock exchange. But there has always been a practice of transactions in the economy even before the capital market and the stock exchange. So that tension is being there. I think now what's happening is just to formalize it on the equity side, but then adding the government bond side, and also the corporate bond side. What I would say is that it's important that capital market and the economy goes hand to hand. If capital market develop too fast and become too sophisticated for real economy, it can lead to excesses and maybe failures. At the same time, if capital market don't develop fast enough to support economic growth, then it's also a problem. So I think that balance is very important. But I would say roughly, really, what capital market do is to prepare investable assets. Securities, government bonds, equities, and also what was mentioned today a lot is where retail investor can invest, which is really collective investment structures or vehicles. Those are all instruments that can allow for people to invest. So that's really investable assets. And I would also emphasize that investable assets, you have the government side, you have the corporate side, and you mentioned housing and infrastructure. One thing I would add is that if you look at the US, the commercial paper business has developed to allow corporate to borrow on the market on a revolving basis instead of banks. And I think that approach can be applied to sectors like agriculture. Here, for example, agriculture is one of the biggest, I would say, sectors in any economy in Africa. For some reason, it's not translated in the financial sector. But I think technology is changing that, and it could become a big investable asset that can be developed and created. You mentioned SMEs, and then you have all the thematic bonds, gender, climate, sustainable bonds. And then on the other side, you have investors. Can go from institutional investors all the way to retail investors. They have different type of, I would say, first resources to invest, and then they have, different approaches to investing. And in between is the market, the regulator, which really define the rule of the game. And then you have the market infrastructure, both in terms of physical, technical, technology, but also, all the human side. And then there is what I would call the market support services. Like somebody mentioned today, you mentioned it also, market function based on integrity and trust. And those trusts are based on reporting. So for example, financial reporting is one of the most important things, because if you don't have the proper reporting, it's very hard to know what exactly or how exactly an asset is risky, or how much it can return. So financial reporting is very, very important. The fiscal aspects are very, very important. If capital market is taxed too much, it won't develop. But then it also has to be taxed so that it can contribute to economic development. So all those aspects has to be planned and executed. And I think the good thing about Ethiopia, when I look at what's happening today and what IFC has seen and done elsewhere, we used to actually create and invest in stock exchanges 30 years ago in many countries, and then we stopped. And then we did some market level, projects like in Rwanda and other places where it was very successful. But I think the success is always based on commitment from the country and the government, the planning phase of it, and picking people who have the capacity to execute. And also make sure that if there is a deviation from the plan, there is a course correction mechanism. So I think that's why I started by saying, while Ethiopia deliberately delayed the creation of the capital market, it is doing it today, but in a very, very, I would say, structured, disciplined, and planned way. And to the point that actually we moved our capital market team to Addis, okay? And I think our colleague here, Grace, is based here working with Hana and Tehelku from the ECX and all the players in the market. Just to say that really, I think Ethiopia has tried to leverage the experience, both good and bad, from other places, have tried to mobilize partners who can help the country, implement its capital market development plans, and that's why it's going quite fast. And I think once all the things that were discussed today in terms of the market compartments, you have government bonds today, corporate bonds are coming, then you have mutual funds or CIS, as was mentioned today, but also thematic bonds. All those things can happen in a very short period of time.
Thank you, Mr. Aliou, for that reflection. And I'm glad you've raised agriculture as well, because usually when we discuss about capital markets, we focus on financial institutions and the usual suspects. But agriculture is one of the largest sector contributing to the GDP in Ethiopia. So thank you for that. You have also discussed on diversifying products in the market, and most importantly, the role of DFIs like IFC, as you've operated in different jurisdictions. Maybe, I know we have had discussions in the morning on both retail and institutional investors, but specifically because you're from IFC and IFC does both supporting the markets and the investment side. How can DFIs help bridge the gap between this capital and the market by building a robust pipeline of climate resilient and inclusive projects, because you've raised about diversified products in a market? And how can we work together, because it was reflected in the morning as well, collaboration basically increased, maybe doubled the pace of the Ethiopian capital market development. So work together to ensure there is a steady stream of opportunities that meet long-term investor criteria.
Yeah. No, thank you very much, Hana. And like I said, we actually moved our most senior capital market person here in Addis because it is one of the major capital market initiatives in Africa happening today. And because it's important to us, we build a team here. So our role as a DFI is, IFC, FSD, AFD and all the other players, we work together, and the World Bank, really, first of all, in the planning of the development of the market itself. That phase is ongoing. I think the next phase for us, IFC, which we are preparing for already, is to do demonstration transactions. Because the best way to show that something works is to do a demonstration and then replicate it until the market adopts it and overplay, comes in. So on the equity side, for example, I can tell you that we already worked internally to get pre-approval for large amounts that we can invest in the financial sector, because I cover the financial sector in Ethiopia, has banks go to market, or has foreign investors also come to Ethiopia, because while the capital market is evolving, is also the opening of the financial sector is happening. So for us, the next phase will be really to participate in transactions or take the lead in transactions to demonstrate and bring in, bring comfort to both sides, investors and the issuers, but also learn by doing. Because sometimes you set up everything, but because it has not been tested, you cannot know what works well, what doesn't work well. That's one thing that we want to do on the equity side, definitely. On the corporate bond side as well, we'd like to participate, and I think it's easier with banks. They have a traditional balance sheet, and we know them very well. We have 5 partner banks here, so and the amount doesn't need to be very big. Then I would say we also need to work on really building capacity across the board, not only the regulator, the exchange, but also the investor base, build their understanding of capital market instruments, so that they know the risk they are taking. There is nothing worse than inducing people to take risks they don't understand. I mean, personally, I never take anything I don't understand. So, very simple rule in life. Then on the retail side, it's really about building awareness for people, particularly those who are interested. I mean, you'll find out maybe half of the population does not even think about capital market because they don't have the minimum ticket to participate, so there's no interest for them. But those who are interested, for whatever reason, it could be savings reason, it could be pension planning reasons, many reasons, give them the tools they need to understand the basics of capital markets is critical. So having awareness campaigns, but also having freely accessible tools, and those are very easy to do today through the internet apps that people can access in English and the main national languages, for example. These are all things that we can, really work together to do. But just to summarize, I mean, we are partners, so partnership is about looking at something need to be done, and looking at what is the best role each party can play, and then coordinating to make it happen.
Thank you, Mr. Aliou, for that. I'd say good news that we have a pre-approval on your investment and equity in the financial sector in Ethiopia. I think, in my opinion, the highest vote of confidence in a market is investment. You might write positive notes on a market, but nothing is better than investing in the market. The signal it sends, the impact it has on a market is really important. And you have also mentioned about demonstrative transactions, which I'd say has multifaceted impact on a market. It basically shares experiences, move the market, provide investor base, and provide products to the market. So I'd say doing demonstrative transactions would greatly impact the market. On the note you've made on the investment commitments in Ethiopia, maybe specifically I want to ask you on continued collaboration with IFC, with ECMA, the regulator, the exchange, and the broader ecosystem. I mean, we're excited about the potentials for collaboration, of course, with IFC. As this morning's gift has kind of demonstrated, we're very grateful for our partnership with IFC and other partners we have in this room. What do you think is the pathway for IFC to become an active participant in Ethiopian capital market? I know the commitment is there. I know there is a willingness to support the capital markets, and we can see it through your office here in Addis and the commitment to invest. I'd love to see more, understand more, and see some of the milestones, maybe criteria you look for, so we can work basically towards that to kind of bring that investment from IFC and then in effect bring other investments as a result of IFC's investment.
Yes, I think, like I was saying, for us, the mutation transactions are very, very important now that the basics of the capital market foundation has been, laid down. Banks are, registering their shares, maybe not listing, but at least registering. That's happening. The government bond market is picking up, and you have a secondary market as well, which is, picking up, like the CEO of the ESX mentioned today. But still, I think there is the corporate side that really we need to do demonstration effect, both on the financial sector, but also on the real sector side. I mean, it's, what I mentioned about the equity side, it was just a preemptive pre-approval of an amount. I don't want to say the amount because I don't want that number to dominate what I said, but it's a large envelope. And the plan is to deploy it over the next 2 to 3 years with banks that list or banks that open up their capital for foreign investment. Just to give an example, China developed very, very fast and became big very, very fast, but its capital markets really developed only in the past 10 years. And a lot of the first of a kind transactions in China were done by IFC. For example, the first securitization of microfinance loans in China was done by IFC. And also, when China was opening up its banking sector, IFC invested in 5 to 6 banks, was the first investor to invest in the banking sector in China. And we took a stake in 5 to 6 banks. And because the market was maybe small and the growth was fast, it's where also IFC had the biggest impact, but also we made the biggest amount of money. So it goes, hand in hand. And I think for us, it's not about money. It's really about, developing market and developing countries. And we like to replicate the same here in Ethiopia. But of course, I always look at partnership as both ways, and things only work if the other side is also, quite, response. And I think we have a very good and strong response in Ethiopia in terms of commitment, but also in terms of, capacity. And I'm sure in the next 2 years, you would see a lot of IFC in the capital markets, on the equity side, on the bond side, on the thematic bond side, and whatever we can do to support development of the market. Just last point, which my colleague made today. Technology has changed a lot investing. After I left Addis 2010, I was manager for the financial sector for IFC in Asia. So I was covering China, Indonesia, Philippines, Thailand, Vietnam, all these countries. And I had really, I would call it a fortune, once in a lifetime opportunity to work with Alibaba when they were creating their financial, services subsidiary. And literally, they combined few microfinance institutions and their payment platform to provide digital financial services. And it's amazing how it evolved because of the technology. They made it possible for retail investors. I mean, they bring the cost of transaction down so much so that people could invest less than 10 RMB for, in the market. So, and today you have the same phenomena here. While the capital market is developing, technology is also developing. So if you combine those two, I think there is even more possibility to accelerate the development of the market here. What maybe other countries did in 5-10 years could happen here in, in 1 to 2 years.
Thank you so much, Mr. Aliou, for basically showcasing the commitment of IFC to the development of Ethiopian capital markets, and of course showcasing the first commerce advantage, as you've done it in many jurisdictions, and it's like a win-win situation for both parties, for the DFIs, the institutions like yourselves, and capital market development in country like ourselves. And I absolutely agree with the point you've raised on technology. We have also a session on the summit on capital market and technology nexus, including AI. So we'll leverage for sure technology, because you've mentioned it earlier, using technology in advancing financial literacy amongst both retail and institutional investors. We'll definitely build on that, and hopefully it will be a point of collaboration between IFC and ECMA. Before I let you go from this stage, Mr. Aliou, maybe one last message. It might be to me as the Director General ECMA, or maybe to the ecosystem. Out of your experience, your presence here in Ethiopia, maybe your work with IFC, that would be a concluding note for me.
I would go back to the initial message I made and why I came to Ethiopia instead of that country which I will not name. DFI sometimes take a lot of credit for what they do if things work well. If it doesn't, they don't mention it. But in my experience, things work well when, again, when you have commitment and capacity on both sides. And this is not to flatter you or Ethiopia. I think there is a history why it's happened. And you just have to look at the diaspora of Ethiopian in the US, both in business and in government. There are many people who have done very, very well in whatever they do, and that link with the country exists. So I think what really sets the whole experiment of capital market apart is the profile of the people who are leading it. We work with you. We see the capacity, but more importantly, the decisiveness to make things progress. So my message is really, again, to thank you, actually, honestly, for the tremendous work you are doing. Our job is to support you and the country. But I think, honestly, the credit goes to you and the governments and all the people who are involved in initiating, planning, and executing the capital market development story in Ethiopia. Thank you.
Thank you so much. That would be it for us. Thank you so much for being here. Please, a round of applause for Mr. Ali. Thank you so much.